Hello guys, and welcome to this video. In this video we're going to talk about if Cathie Woods has royally effed up or it's now time to buy her ETF. Cathie Woods needs no introduction. I actually remember when she was called into CNBC a lot to talk about her Tesla price target of $3,000 before Tesla blew up, and I remember people would just laugh at her, and she was like this funny analyst to have on TV that you can laugh at with her very funny price targets. And then 2020 came, even before then Tesla blew up. And then 2020 came, COVID hit, and with the Fed's money printing strategy, it was really strongly favoring her ETF, and she ended up posting 140+% gain in 2020, which is unheard of for an ETF. I think that was the best ETF performance on the planet. So naturally, she has gotten a lot of new investors, but in 2021, it has been a catastrophe year for her. The general market uncertainty and the Fed tightening cycle, it really went against her stocks, and most of her funds are 60+% down, which is crazy. But it makes you think, is it now time to invest into innovation with Cathie Woods? And to discuss this further, I want to invite you over to my computer screen. So first of all, I just want to orient you to the fund's performance, and this is the flagship fund of ARK, and you can see it's from the top, it's 59% or 60% down. It's at the bottom. That's after a crazy year of performance. And what do they invest into? This is what I think the lure of investing into Cathie Woods is that, I mean, if you read this fantastic story, it makes you very horny as an investor, actually. And here comes the allure of investing into an ETF, because basically their proposition is that they have this team of analytics, and they do essentially the heavy lifting for you, and they do all the tough work, and they invest into the future. They capitalize on inefficiencies, and they're making the world better. It's like everything you want to hear. And they have this really cool story of how you have so many new emerging technologies converging at the same time, and this has never happened in this universe. This is all a theory. And if it's correct, then they're going to make a lot of money. If it's incorrect, then yeah, it's going to be a lot worse than this. So to see if she could be nearing the bottom, we have to ask us a few questions. So one of them is, why has her fund been hit so far? Number one is that she is investing into what is considered riskier assets, because many of her stocks are unprofitable growth stocks and very high PE stocks, very high valuation stocks. And right now the market wants anything but risk, so her sector was very heavily punished. But you could argue that everything is out in the open now. We know how many rate hikes we are expecting from the Fed. We know that the inflation is high, so there is a possibility that everything is already priced in. I mean, it does look like it. So if this is true, then it's only up from here. If there is an even worse tightening cycle, a market recession, then there is more pain for Cathie Woods. Then if we look at what are her biggest holdings, there is a website here that tracks her biggest holdings called CathieWoodsStocks.com, and I don't know all of the stocks that she's investing in. Obviously Tesla I know, and Tesla again is at quite a high PE, but it's a profitable company, so it's even palatable for the current market environment. It has very good growth out of it, and barring a catastrophe in the world economy, Tesla is going to grow in the foreseeable future. So that's a pretty good investment, right? Zoom is one that was that has super benefited from the COVID health crisis. However, and it has become way more relevant, way more customers that are staying customers. And look at it, it's trading at prices that are basically let me see. They are pre-pandemic, basically. This is pre-pandemic levels here. So I would argue that there's not much more room left to go down for this stock. Teladoc. So Teladoc, I would argue that this is a similar story as Zoom, that they are back to, 2018 prices. Oh my god. And imagine how much more relevant they have become, how much more progress that they have made as a company since the pandemic, and they're back to that level. Then Roku, I don't know anything about that company. Then you have Coinbase. Now Coinbase is very interesting because it's a growth stock, but it has a super low P. And I guess that this has to do with the fact that crypto hasn't been doing very good. But it looks like crypto has bottomed out. And the only thing that can really, really hurt this company is if you have a multi-year bear market cycle in crypto, because obviously the higher the Bitcoin prices, my understanding is that the more provision and more money they make. And this company is actually fairly lowly valued for a growth company. And so if you look at the funds, these are the top 5 holdings. So I would say that with the price points that this ETF has gotten to, if you do a research and you like her investment style, I would give it a lot of thought in investing into this ETFs. Although the reason why I would never invest into Cathie Woods ETFs, or any ETFs for that matter, is because I believe that if I do my own individual research and I follow my own strategy, then I like the control, because then I know if I'm doing something right, what I did right, if I do something wrong, what I did wrong, and if the prices are going down, I know I need to change. If I give my money to Cathie Woods and ARK Fund, I have no way of controlling my own money, and I basically just trust her. And when you're going through a cycle like this one, how do you know that this dip is going to have a return? And this is why I don't like investing into other people than me. But if you don't have the time to develop your own strategy or pick your own stocks, then this could be the perfect investment for you. Thanks for watching.